Welcome to the February 12th, 2024 Advance Report for McGowan Group clients and networthradio.com listeners. Beware capitulation buying. I'm going to show you the real story on historic events in the financial markets and one that is unfolding before us. We'll focus on the Magnificent Seven. These are the AI-powered stocks that say, okay, we're in a new AI super cycle. And we did AI mania, diabetes, weight loss, drug mania, all those that are going on right now. So there's a good read on the financial markets. This is the NASDAQ 100, primarily tech stocks, and the Magnificent Seven make up about half of this index. That's a lot. In other words, 7 stocks are driving the performance of this index, and there's other rallies going on. Super Microcomputer up 158%. They make the circuit boards for the big AI chips, right? So this is a frenzy we've got going. I say beware capitulation buying. I'm going to show you that lesson in just a second. But first, what we're going to do, cover the NASDAQ 100, the tech-powered rally, the AI mania, 6% year-to-date gain for this index. Now, this index, remember QQQ, that's the NASDAQ 100, primarily tech stocks. We're going to come back to that. Now, 6% for this index. We go to the Dow, year-to-date, 2.5%. So obviously these are driving the overall market, S&P 500 as well. So what's happening here? You hit a new high this week in the Dow, right? 38,700 and change. And the S&P 500, for the first time in history, topped 5,000. This is why you want to subscribe. We covered this at the beginning of 2023. We had a forecast. We were looking through all the forecasts. Jim Paulson over at Leuthold, not the hedge fund guy, not the Goldman Sachs guy, but Jim Paulson over at Leuthold. As an analyst, he said the S&P 500 likely to hit 5,000 by the end of 2023. He gets a Sir John Templeton Award because it just hit 5,000. Maybe he was 6 weeks off, but he was the only guy that was bullish at the time that we could find. And he said, everybody's bearish, there's a looming recession. Remember the beginning of last year, that's exactly where we were. There's going to be a recession, it's going to be ugly, and things are going to continue to get worse. No, but Jim Paulson is one of those forecasters that we cover. That's why you subscribe, and especially if you're getting good advice at the right time, you can make great decisions. Now we're going to cover beware capitulation buying. By the way, I'm Spencer McGowan, your financial weatherman, a weekly fast-paced tour of the global financial markets. I'm also president, McGowan Group Wealth Management, a team of 10, the team that cares. We serve affluent families right here from the Crescent in Dallas. You can find us at networthradio.com, and if you want to set your time for a brainstorming session, we would love to perform the completion of a new investment plan for you that takes into account when you get into a mania, how do you handle that? How do you participate without blowing the whole deal? This is the NASDAQ. I'm showing you a snippet. I cherry-picked on the NASDAQ 100. If you had the courage to buy this index, the aggressive tech index, right at the point of COVID, you would have a 28% total return from March of 2020. But if you weren't buying things in that correction, maybe you shouldn't be chasing things right now. And here's why. Look at this. Beware capitulation buying. I'm going back to the beginning. 1990s, .com was everything. New technology, everybody's in the rage. This index comes out at 50. It goes all the way to 120 at the beginning of the year 2000. Everybody's piling in. Capitulation buying. I just got to have tech. What happened? Whoa, it goes from 120 to 20. by October 2002. Ouch! And that's a low-cost, diversified ETF, only diversified primarily in tech, but anyway, loses 80% of its value. How long does it take to get back to its old high? 17 years in the desert. Wow! But now it's all the rage because it's done 28% a year since the pandemic. Beware capitulation buying, fear of missing out, people piling in. I just got to have Bitcoin at 70,000. That didn't work out too well. That was painful. It did come back to 45, 46,000 this week. But anyway, that's a whole different video, and I'll do a special one on crypto coming up. All right, let's go to the next subject here. S&P 500 earnings. Do they justify the current rally? Well, maybe, but it's not as compelling as we'd like to see. Earnings growth, you got 2/3 of the S&P reporting so far, 2/3. Earnings growth, 5%. Now that's better than the earnings recession we had, but it's not compelling enough to justify much further, and you may start to see some disappointments. How do you handle that? In McGowan Group Wealth Management fiduciary portfolios, which all the team participates in those choices in their own accounts too, we will start to harvest back to tactical safety at high points here by taking some profit off the table. We've got that scheduled for this year, so that's the strategy that we're using. McGowan Group Wealth Management, team of 10, team that cares, will continue to monitor this to make sure it justifies the overall rally, and we will continue to add compelling growth ideas to the portfolio as well as income ideas. We'll raise that tactical safety and be ready for the next trouble period.